Alright, I'd like to start looking at closing entries. We are going to use the closing entries worksheet to do this video. So what you need to do is you need to go onto Blackboard. You need to print out the closing entries worksheet. And then you need to work this along with me. This is what the closing entries worksheet looks like. So you have the ABC Company adjusted trial balance for December 31st, 2017. It lists the accounts in numerical order. This is the worksheet that you need to have out, and you need to be writing your answers on this worksheet. Now the first step that, or one of the first things that you can do if you have it in numerical order, is you can come in and you can draw a line between some of these different accounts. And I actually normally look at capital. It is an account that will change through the process because we are closing things to the capital balance. Everything above this line will stay the same. Everything below this second line needs to go to 0. And so those are some of the things that we are looking at when we look at these adjusted trial balances. So for this particular one, what we're looking at is we are closing based on REID. So when we look at this, revenue is the only R that we have in this particular one. These are all of our expenses. We'll do down below. What you'll notice is that, and I'm going to go to the next page, that our service revenue account, it has a balance of $31,900. Notice that it is on the credit side. So if I wanted this account to be 0, I would need amount on the debit side. And so in closing the R, which means revenues, what I need to do is I need to debit the service revenue account, and I need to credit a new account that we call income summary. And that would be for that $31,900 is what I would be looking at for those debits and those credits. The next set of accounts that we're going to look at is E. Now remember, E is for our expenses. So if I go back to the worksheet, these are all of our expenses. You will notice that all of these have a debit balance. So if I want to get them to 0, then I would have to credit all of these accounts. So in looking at this, what I suggest you do is you are going to be closing these to income summary. So I suggest you go ahead and you write out income summary. Go ahead and put a box there in the debit, because that's something you're going to have to go back and fill in. And then you start listing all of your credits, which are your expense accounts. So you have a salary expense at $4,500. You're going to have a repair expense at $800. You will have a supply expense, and that supply expense is at $1,600. You will have depreciation expense, and that depreciation expense is going to be at $1,000. And the last thing we have here is a gasoline expense, and that is at $3,800. I then am going to take all of those amounts and I'm going to add all those expenses up to get the total that we need to put in that debit column. So when I add all of these accounts together, that total is going to come in here, and it is at $11,700. I'm going to add it one more time just to make sure. Hold on. Got something different that time, so let me. Yeah, 11,700. And so what we need to look at now is this balance in this income summary account. So we have an income summary, we have a credit for 31,900, and just remember that that is coming from right here, and then we're going to have a debit for 11,700, and so then we need to look and compare those differences, and that's going to give us a balance of 20,200. So when I move over, I'm going to take that 20,200. That's what the balance in that income summary account is. And the next one that I look at is that I. And I stands for the income summary. And so when I close it, I have to look at the T account for income summary. In this case, if I want a zero balance, you notice the amount is on the credit side, so I would have to debit income summary. Income summary is one that doesn't stay the same. Revenues and expenses, you're always going to look at debiting the revenues and crediting the expenses for closing entries. But for income summary, you actually have to look at the balance and see if there's a net income or a net loss, and that's going to determine what you have. Now, the income summary account will close to the capital account. So the two accounts that you're going to be looking at here are income summary and capital. We need to debit income summary. So I'll have income summary for that 20,200, and the credit account is going to be that capital account for 20,200. The next thing that we look at in closing entries is the D, and D stands for the drawing account. So what we'll do is we will look back at this amount, and what we see is that in drawing we do have a debit for $1,200. So since we have a debit there, we are going to close the drawing account also to the capital account. And so since drawing has a debit balance, it needs to be our credit account so that we can actually close this account, and our debit account would be the capital account. And so we would have that $12,000 there. What we see is that all of our temporary accounts, which are the drawing down through revenues and expenses and income summary, will close and will be zero balances now. And we will have a new amount in our capital account. So here we see, the 12,000 here. We started with our capital at $3,000, and we do have one other entry that was made, and that was here. We do have to look at what happened here with capital, and that is $20,200 that we had in revenue. So at this point, what we will look at is we have $12,000 on the debit side, we have $23,200 on the credit side, and we need to look at the difference, and what that is going to give us is an $11,200 is what we will have as our balance, and this is a credit balance for our capital account. Just as a reminder, when you look at R, E, I, D, these are the things that you're closing. So you want your revenues to go to zero. You want your expense accounts to go to zero. You want your income summary to go to zero. You want your drawing account to go to zero. We never close capital. All right? So what that means is capital is not going to zero. What we close are revenues, expenses, income summary, and drawings. The revenue and the expense are going to close to income summary. Your income summary and drawing account will close to your capital account. So just keep those in mind. Now I want to look at one last thing, and that's that post-closing trial balance. And I'm going to use what we had here to actually go into this. And what we see when we look at this post-closing trial balance, we see that these accounts here are all at 0. Everything above the line stays the same. So when we do look at this post-closing trial balance, cash is still going to be at $6,800. Accounts receivable is still going to be at $2,500. Trucks are at $8,500. Equipment is at $6,300. Accumulated depreciation is at $1,000. Accounts payable is at $3,500. Notes payable is at $8,200, and salary payable is still going to be at $200. The thing that changes here is the capital account, and where we're going to get that information is right here. So the capital is at $11,200. So when we go back to this, in the slot, we are going to put that $11,200 in. And so when we total everything out, what we are going to be looking at on the debit side is going to be a total of $24,100. And on the credit side, if we add all of those amounts, we also are going to have that $24,100. Now remember, that is replacing the capital. All of these amounts, as I said before, they go away. They are no longer there because they have gone to 0. The capital account is what changes, and then you just add those amounts, and that's how you get that post-closing trial balance. Make sure you go through this worksheet, you complete the worksheet, and you upload it to Blackboard. That is part of your participation grade, is uploading this worksheet to Blackboard. So make sure you finish, you complete the sheet, you can take a picture of it, you can scan it in, however you need to do it, upload it to Blackboard under Worksheets.